Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased technical analysis. And despite some NFP data that came in higher than expected, the market gave us an initial drop all the way down to 400, but then spent the rest of the day just creeping back up, filling the gap. Guys, what is going on with the market? But you know what Uncle Charles does, I'm gonna identify the setups, the triggers, the levels, the case scenarios that we need to watch out for so we can trade this unbiasedly sheep style. Let's go. So yeah, this is the 15-minute chart. Like I mentioned, had that big gap down when we got NFP and unemployment data came in. Okay, now a lot of people has talked to Uncle Charles about how they kind of struggle with trading when the market gaps up and gaps down like this. Okay, I wrote in my Discord, I got first support at 41.5 and first resistance at 4.3 with 4.4 above. Watch for the first breakout / breakdown. We gotta watch for that first breakout. So anytime the market opens, you want to identify the most immediate support and resistance levels from relative to where the market opens. Okay, so the plan was to look for calls when 403 clears and look for puts when 401 fails. All right, and you can see here on the 15-minute chart, this blue line right here, that was my 403 level. We cleared it and it gave us a one directional day to the upside. Okay, this pretty much was a bear trap. All right, so if anybody's considering joining Uncle Charles' Discord, and if you think it's worth it or not, I want you to consider this trade call out that I gave out. How much money would you have made if you followed Uncle's call out or strategy? And you guys can see if you think my Discord is worth it or not. Okay, but we'll move on to the daily chart now. Okay, so the big thing is that we got 3 closes above that 200-day moving average now, which is around 403.75. There is no such thing as a bull market that is below the 200-day moving average. So very critical, very critical that this level or this moving average gets defended. All right, so we had some upside since October. Okay, November 30th on Wednesday, we had this big move. Shout out to Powell. But when we get big up moves like this, you can tell a lot on the about the move on the first pullback. Okay, so technically this was a pullback, and what happened on this pullback was that it opened below the 200 and it recaptured it. So you can even consider that as a back test. And in my opinion, it defended, which favors the bulls. Okay, so now that we dealt with this situation with the 200-day moving average, now that that's been dealt with, bulls need to continue showing follow through. Here is the bull case scenario. I'll have the bearish case scenario after the bull case scenario, but here is the bull case scenario. So now that we got this situation dealt with, obviously SPY needs to continue to show momentum to the upside with the next critical resistance at 409. That is the breakout of this multi-month trend line since January, connecting to March high and August 16th high. Okay, above 409 would be a breakout of that trend line. Okay, now I do got this rising wedge. Breakout of the rising wedge is for Monday is at 410.5. Okay, because mind you, it slopes up. So 409 is the multi-month trend line. 410.5 is the breakout of this rising wedge. Okay, that will put 411.5 to 412 zone in play with 414 above that, and 418.5 and 420 with 421.7-ish above that. Okay, those are my resistance levels. Those are my target levels. If SPY can clear that 409 level, it has to start with the breakout of that 409 level multi-month trend line and continue breaking out 410.5, breaking out the rising wedge pattern. Okay, that's the bullish case scenario. Bearish case scenario. SPY closed at 46.9, which makes first support that I got. It's not a critical support, but I do got 46.5. Okay, below that will be the critical support of the 200-day moving average. Okay, I'm giving it a zone 403 to 403.75, okay? That's based on the 200-day moving average, but I'm giving it a zone. If we can fail 403, I would switch to being bear bias, okay? There is support at 41.5, 400, 398.5, and the support of the rising wedge is around 397, okay? Below 397, I will be even more bear bias. I would favor that this rally from October would be over and we could possibly head down to more downside, okay? But the bearish case scenario, I do got the next support at 46.5, but the real bull case scenario begins when we actually get a close below the 200-day moving average, which is around 43.74. It's got to be a close. It can't be like this, where we was below it for a little while, intraday, and then we recaptured it intraday. That was just a nice trade setup for us to look for longs or calls, okay? On a daily chart, we got to get that close below the 200-day moving average to give us the false breakout setup. The false breakout setup is bearish, okay? So you guys got my bullish case scenario, you got my bearish case scenario. It's up to you guys to trade it unbiasedly, all right? Now the VIX here, I got to get my levels back. Here we go. So the VIX here is below 20. I had support at 1912, but usually when the VIX is below 20, usually it's in a bull market. You know, we look at this chart, you know, since January, I know we've been pretty bullish lately since October, but since January, we're on a downtrend. Not quite looking, you know, bullish. I wouldn't say this is a bull market as of right now, at least since January. I wouldn't say this is a bull market. So with VIX below 20, it's very interesting stuff. You know, be very careful because VIX has a habit of exploding to the upside when it gets to really critical support levels. All right. So that 1912, that's my support level. That was a previous low back in August 12th. All right. August 12th, which was around where SPY got its last, you know, decent top. All right. So this is a very important zone for VIX. Okay. 1912 fails. We actually closed at 1907. So it actually did fail. So as long as below, I got next support at 17.33. All right. To be bullish, SPY needs, VIX needs to get back above 19.4 and especially get back above 20.6. Okay. A low VIX, it usually represents greed in the market. VIX above 30 represents fear. So the fact that it's below 20, you know, there's like no fear or very low fear in the market right now, at least according to the VIX. DXY tested that critical support level at 104.3-ish, you know, after breaking down my ascending triangle. So, you know, for the DXY to continue to look bearish, it needs to take out that support, all right, at 104.3. For it to be bullish, or at least short-term bullish, it needs to recapture 105.3, okay? So, you know, VIX and DXY, they're usually inverse of the SPY, as you guys know, or I hope you guys know. And if you didn't know, now you know. So, if it's continue to look bearish, you know, that could be bullish for the SPY, all right? If the VIX continue to look bearish as well, it could be bullish for the SPY. But like I said, a low VIX represents low fear, some greed. We're seeing greed in this market right now, despite the high inflation. Very, very strange times we're in, guys. But that's why we got to be sheeps. Trade like sheeps. It don't make sense, but you got to trust that price action. Market's going to do what it's going to do. Trust that price action. The price action is the good shepherd. Triple Q, similar with Triple Q. I had a critical level around 290.7. And it opened below that, but recaptured intraday. You know, so we got 3 closes above that critical 290.7 level. That's my 23.6 fib level from November high down 2021 down to October of 2022. Okay. So yeah, as long as 290.7, I'm gonna give the bulls the benefit of the doubt. All right. Immediate support level is at 292 with 290.7. So those are the 2 support level that must hold. So to continue the momentum 294.34 is the next critical resistance level. Okay, it's the 50% fib level from August high down to October low. So clearing that level would definitely be signs, strong signs, that the bullish momentum is continuing. Okay, I'll turn bearish below 290.7. All right, I got 287.7, 284.8, probably lower down to 281.8, 280, 279.5. Okay, bearish case scenario starts when 290.7 fails on the daily chart. Okay, as long as above 292, I got to see that 294.34 level clear, trigger more upside. Maybe grab some calls if that happens. Okay, Dow Jones, false breakdown setup intraday off that 343 support level. All right, so as long as above 343, you need to see 346.5 clear to get to 348.7 and 351. Okay, bearish case scenario for Dow Jones, start below 343 with 340, 338, and 336.5 in play. Apple, the critical level is 147, 61.8 fib level from June low to August high. Okay, recaptured it intraday because we opened up below that yesterday morning. Okay, this is why I'm pointing to know the setups, know the level, just trade it. You guys know the false breakdowns and the false breakout are my favorite setups, and it worked out beautifully yesterday. Yeah, as long as above 147, bulls got a chance for Apple. I need to see 149.5.6 clear. Okay. Yeah, I need to see 149.6 clear. Break out of this trend line right here, downtrend line breakout, and we could trigger more upside. All right, get to 152.4ish, 155, 1.8ish, 158. Okay, bullish case scenario has to stay above 147. Bearish case scenario comes into play below 147. You can see more downside down to 145.6, 143.5, 141.6. And what else I got here? 140. Yep. Okay. Those are my levels for Apple. Here's Tesla. So yeah, Tesla lingering around, my 194.5 level. Close just above it. Okay. So 194.5 and 192.5 are my supports. 192 190.8 lowest that I want to see hold to be bullish. Okay, so hold those levels above 200.4. I would definitely swing calls. Okay, if you're not already swinging calls, if you are, and Tesla clears 200, you keep holding, assuming you got time on your contracts though. Okay, but yeah, 194.5 must hold. All right, I got next resistant at 196.6, and then 200.4. Clear that. Positive go test tool 7.6. Nice little move to the upside. And clear tool 7.6 would be very bullish. See more upside. 210, 215-ish. Around there, okay? So yeah, you guys got my levels for the ETFs. Got my analysis. And let's end this with the option flow. I gotta sign in. And this is what I do. I find SPY. I filter it for 500K premiums or above. And I'm only going to look for the above ask. Okay, I want to see the most aggressive plays. And the most aggressive plays right now are out the money puts. Okay, they got time on it, but those are the most aggressive plays that the big money are doing. Out the money puts for late. Look like mostly, late January, mid-January. We got one here in March. Not as aggressive. But that's what we're seeing, guys. See if Triple Q showing us something. So the most aggressive plays for Triple Qs are calls, in the money calls, though. 290 strike price, December 2nd. They might have traded that already. All right, so they might have, they probably made profits on that already. Okay. Dow Jones. Nothing for Dow Jones. Tesla. Okay, some calls, aggressive call for Tesla, but not that, the size isn't that high. Yeah, and it's in the money. Yeah, I think that's it, right? Got SPY, Triple Q, Dow Jones, Tesla. Apple. Yeah, nothing for Apple again. Okay. VIX. DXY. Yeah, nothing for DXY. All right, guys. So that's what I have. If you guys, want access to this, you guys can always join Cheddar Flow. All right, or you can join my Discord, and I share my all the datas with you guys, all my members. Links in the description, pinned in the comment section below if you're interested in the Discord. I also have a Substack you guys can check out if you guys want to support the channel. I appreciate it so much. And have a great weekend, guys. Peace.